Hello everyone, I welcome all of you to this webinar on dynamic contracts. Dynamic contracts is a feature on Streak platform which allows you to easily create and backtest your strategies on futures and options, and later on obviously you can decide if you'd want to do paper trading or live trading also with those strategies. So let us move ahead, and first of all we are going to see what topics we'll be covering in this webinar. This webinar and all the information contained herein is for educational purposes only and should not be construed as trading or investment advice. Streak AI Technologies does not provide any trading or investment advice. First of all, we'll see what are the advantages of using dynamic contracts for creating your strategies. Then we'll see what are the parameters of dynamic contract. Then we'll see an options selling strategy example. I'll be showing you step-by-step process of creating a multi-legged options selling strategy on the Streak platform and how we can backtest it on historical data. Then we'll also see options buying strategy example. We'll also see some scanner examples, and in the end we'll conclude this webinar. So what advantages do dynamic contracts offer? You can define if you'd want to trade in the money, at the money, or out of the money, and then appropriate strike will be selected based on the price of the index or stock at the time of the entry. So I'll be explaining this with example also. If you're not able to understand it properly right now, just wait for the next slide. We are going to look at the example as well. Allows backtesting on continuous futures contract. Then we have more than 3 years of expired futures and options data, which is going to let you backtest your strategy on more and more data so that you can test it on different market conditions. It makes it easy to create and backtest multi-legged option strategies as well. So what are the parameters of dynamic contract? Whenever you create a strategy on the Streak platform using dynamic contracts, you're gonna be presented with these options. So first of all, you'll have to pick if you want to trade the call or put option. Then you'll have to decide which strike do you want to trade. So if I put 0 over here, that means I want to trade the at the money call option. So 0 represents at the money. Now if I go on the positive side, let's say I put +2 or +4, that means I want to trade 2 strikes or 4 strikes above at the money strike. If I go in the negative values, that means if I put -2 or -4 over here, that means I want to trade -2 contracts or 4 contracts below at the money strike. Then we'll have to select if you want to trade the current or the next expiry. You'll have to select if you want to trade weekly or monthly expiry contracts. Here you will select if you want to go long or short on this contract when your entry condition is met. And then most importantly, this can be a little confusing for some, so please pay attention over here and understand this option very well. So basically here you can select 2 things. You can either go for candle or day open. So change frequency lets you set the reference price for selecting your strike prices. So for example, for selecting at the money strike, I need some reference price, right? With respect to which price do I want to select the at the money strike? So if I select candle over here, my strike selection will be based on the closing price of the signal candle. So let's say my signal came, buy or sell trigger came at 12 o'clock. Now, whatever the price was there at 12 o'clock's candle, closing price of the 12 o'clock candle, that price will be taken as reference for selecting my at the money strike, underlying price. All right. And then if I select day open, that means strike selection will be based on the day's open price. So doesn't matter when my signal, buy or sell signal is coming. Always, if I select day open, in that case, always my at the money, in the money, or out of the money, whichever strike you have defined over here, that will be selected based on the opening price of the underlying stock or index on which you are creating the strategy. In this example, we have taken Nifty 50 as our underlying. So let us move ahead. Here we'll take an example and try to understand how this option, basically strike, offset from at the money, and change frequency influence each other, or what are the differences between different options, or if I feed in different options over here, what is going to be the impact on my strike selection. So we are taking a very simple strategy example over here. My time frame is 5 minutes. This is just an assumption. We are assuming our strategy time frame is 5 minutes. Instrument that I want to trade can be Nifty call or put option. Okay. Entry condition example we are taking 5 SMA 5 crosses above SMA 10 on Nifty index. Okay. Now let's assume that the crossover happened on the 11:05 candle. And its closing price is 17,810. Okay. So the closing price of the 11:05 candle is 17,810 and Nifty's opening price for that day is 17,715. So basically this example is for Nifty index, right? So I hope you have understood this example. I'll repeat it once again. This is our entry condition. SMA 5 crosses above SMA 10. Now this SMA, we are checking on Nifty index. That is the underlying. And when this happens, I want to, let's say, either buy or call or put option. So let's stick with one of them to avoid confusion. Let's say call option only I want to take for this example. Now, the signal, we are assuming that this crossover happened on Nifty index at 11:05 candle, 5-minute candle, and the closing price of the candle was 17,810. Nifty opened at 17,715 today. Now let's see what happens if I have selected candle. If I have selected candle and my offset is 0. So whenever offset is 0, what does that mean? We want to trade at the money. Okay. So offset is 0. That means I want to trade at the money strike. Now I need a reference price for selecting at the money strike, right? So my underlying is Nifty 50 index and I have selected candle as the change frequency. And so that means whatever the closing price of the signal candle was there, that will be considered. And my signal candle is the 11:05 candle. So at that time, Nifty's price was, or the closing price of this candle was 17,810. So my at the money strike will be 17,800 as per the change frequency candle, right? But let's say instead of candle, I had selected days open price. So now my at the money strike will be selected based on the days open price. Days open price was 17,715. So my strike will be 17,700. Now let's say I had selected 2 as an offset. So my strike will be selected as 2 strikes above at the money. So at the money is this strike in case of candle. So my plus 2 strike is going to be 17,900. So at the time of this webinar, the strike interval for Nifty 50 options is 50 points. That you need to keep in mind. All right. And similarly, if I had selected minus 2 in the offset, my strike would have been 17,700 if I would have selected candle as my change frequency. Now, let's say what would have happened if I selected days open for plus 2 and minus 2. In that case, my strike would have been 17,800. That means 2 strike above at the money for 2 strike above at the money. Okay, with reference to the days open price. And if I would have selected minus 2, that means my strike would have been 17,600. 2 strikes below the at the money strike with reference to the days open price, right? I hope this slide would have made the parameters very, very clear. All these are very straightforward call or put option, expiry, order type, expiry type, but there can be some confusion with respect to strike offset from at the money and change frequency. For that, we can definitely refer to this slide, which is going to make our understanding very, very clear, right? You can even take a screenshot of this slide and keep it for reference in future. So let us go ahead and now practically see how we can use the dynamic contract on the Streak platform and create a short straddle strategy. What we are going to do is we are going to initiate a short straddle at 1:05 p.m. Okay, and we'll put 20% stop loss on each leg. So this is the condition of the strategy. Basically, if you want to check the strategy on your device, what you can do is you can directly scan this QR code. It will open this strategy on your phone, or you can directly open this link also from your browser. This strategy will get opened on your phone, so you'll be able to browse the strategy as and when I'm speaking or showing you the steps. Or the best thing would be that you open the Streak platform right now along with me and start creating the strategy. This will allow you to let you easily, grasp the steps which are required to create and backtest a strategy on the Streak platform. So let's go to the Streak platform now. Here I'll click on strategies and then we'll click on the create button. I'll give it a name. Let's click on the create button. All right. So I'll click on the add button to add the instruments. Now, since we are creating a short straddle on Nifty index, what are going to be our instruments? We are going to short at the money call and put option at 11:05. So for that, we are going to use dynamic contracts. Now, here's the best part about dynamic contracts. If I did not have dynamic contracts, then every day I will have to open the strategy and feed in what is the at the money strike price today. But because of dynamic contracts, I can just define I want at the money strike, and then every day it will be updated on its own. So here I'll search for Nifty 50. Click over here, call option. Let me show this step again. So when you search for Nifty 50, then you have to click over here on this icon. Don't click on the plus icon over here. It will add the underlying, that is Nifty 50 in the strategy. But we want the options using dynamic contracts. So we are going to click over here. Here, let's say call option, strike is going to be at the money, since we are creating short straddle on at the money. Here, expiry type, current. I'll choose weekly. Long or short. So here we are gonna go short. Change frequency, I'll select candle. We'll add new. Now we'll add the put option. So here you can see there is futures, options for futures also. So if you want to backtest on expired contracts of futures, similarly you can select futures also over here. I'll select go back to put options, and here again at the money put option we want, so I'm gonna leave it at 0. Here expiry is going to be current. Expiry type will select weekly, long or short. So we want to go short. Change frequency again, candle. Apply changes, click on done. So I have added both the at the money call and put options over here. Now every day it will on its own select which is the at the money strike. I will not have to open the strategy and update my strike prices every day. Here let's say I'll pick 5 minutes, and in the lots, I'll put 10 lots. Just for an example, you can put the quantity as per your preference. Now this over here, I can select either of them. It would not matter. Why? Because I have already defined over here that I want to short this contract and short this contract. So in that case, it doesn't matter if I select buy or sell over here. If there was a stock over here, let's say I add SBI or some other stock, then it will impact this stock. This option will have an impact on this stock over here, because here I have not selected if I want to short or go long on SBI, but I've already selected if I that I want to go short on at the money call and put options. So this option is sufficient. We do not have to select it again over here. Now we'll use the candle time function. So if you remember, we wanted to enter the short straddle position at a particular time of the day. So I'll select the candle time feature over here, or the option or the function that we have on the Streak platform. Here I'll select hour of the candle, click on done. Hour of the candle has to be equal to number 13, right? So whenever it's 13 o'clock, I want to enter my position. Hourly candle or the hour of the candle has to be 13, right? So exit is going to be very simple. Like I had shown you, we are going to exit if 20% stop loss is hit, and in the target I'm going to just put a very large value because I don't want to keep any target for this strategy. We'll be holding it to towards the end of the day, right? So here there is an option of trailing stop loss also. If you want to use trailing stop loss later on after this webinar, you can experiment with different levels of trailing stop loss also and check if this strategy is giving better results if you are putting trailing stop loss or not. Right here, there are different options of how you want to define your TPSL, absolute points or percentage based. I'll click over here. So we're going to stick with MIS, but for your strategy, you can go for CNC and RML also if you have any different particular kind of strategy that you want to create. Here we have position sizing options, etc. Here in the daily strategy cycle, I'm going to put 1 because I want to take only one trade each day, not more than that. So that option we have also provided. You can pick any preference as per your strategy. For this example, I'm going to go with 1. Let's click on save. So let me just confirm if we have put everything well, and then we'll be backtesting this strategy. So let us backtest this strategy, save and backtest. So backtest is running. Meanwhile, I'll just show you what are the options available over here. So there are multiple options on the right side that you can see, which you'll be able to modify easily and run the backtest again. Here you'll be able to read a snapshot of the conditions of the strategy that you have created, and as you can see, we've seen results over here. Result for both the strikes has come over here, and this is the cumulative result that we are seeing, right? Now let's say you want to check in depth each and every trade that has happened. What I can do is I can click over here. It will show me each and every trade that has taken place at what time, right? So as you can see, every day it is choosing different strike based on what was the price of the underlying. So this was at the money strike for 9th Feb. This was at the money strike for 10th Feb. This was at the money strike for 13th Feb. Now let's say you want to trade with this strategy. In that case, what you can do is you can select the contracts that you want to trade, then you can click on the deploy button. We have two options over here. You can either go for paper trading or live trading option. You can choose the various options over here, accept the terms and click on the live trade button. Now my strategy is deployed in the live market. So let us understand this theory before we move ahead, because for our second strategy example, we'll need this. Here I have simply explained how we can interpret price, volume and open interest if we are looking all the three things together. Okay, so if there is an uptrend, price is in an uptrend, volume is in an uptrend and OI is also moving upwards, then we say that we can infer that it's a strong uptrend or long build up. Same way, if there is uptrend in the price but volume is going down, OI is going down, that means the uptrend is weak or it is caused due to short covering. If the price trend is down, volume is moving up, OI is moving up, that means there is a strong downtrend or short buildup is happening in the stock or the contract. If the price trend is down, volume trend is also down and OI trend is also down, that means it's a weak downtrend. It is happening due to long unwinding. So we are going to use these things in the next strategy. So let us move ahead. In this strategy, we are going to see how we can create an options buying strategy also. So in this strategy, we'll be going long on at the money call option. For that, we are going to check certain conditions. So on Nifty 50 index, what we'll see is we'll be checking for this condition. The close price should be crossing above the pivot points S1 level. This should happen on the Nifty index. And what should happen in the call option? So in the call option, the OI should be rising and the volume should also be rising. So basically, when Nifty 50 is crossing above S1 level on pivot points, we are assuming that the call option price will also rise in most of the cases. So that's why we have not created any additional price condition for the call option. We are just checking if the OI is rising and volume is rising. And again, for volume and price, I have used the exponential moving average of the open interest itself and the exponential moving average of the volume. I have not used OI and volume directly. Why I have not done that? Because there is a chance that in between, let's say volume is going like this, up, up and up. For one candle it might have gone down and again it's going up. So we just want to check the trend, that the trend of the volume should be up and trend of the open interest should be up, not necessarily that on each and every candle it is consistently going up, right? So that is the logic behind using the exponential moving average of OI and volume over here. So again, if you want to check this strategy directly, what you can do is you can scan this QR code, or you can open this strategy in your browser. The best thing, like I had said earlier, is to open this Streak platform along with me, and whenever I'm doing, create this strategy along with me. So let's go to the Streak platform. We'll go to strategies. I'll click on the create button again. All right, let's click on the create button now. So here we are going to add instruments, that is at the money call option on Nifty. So again, we'll click over here, call option, at the money, weekly, current, long, and candle. Click on apply, done. Now we'll be adding the candle interval. I'm going to go with 15 minutes. In the quantity, let me put 5 lots over here. Again, like I had explained you last time, this option we do not need to select over here because we have already defined that I want to go long on the call option, at the money call option. So here I wanted to check the pivot points condition on the Nifty 50 index, right? So for that, I'm going to use the symbol function. I'll put symbol function. I'll type Nifty 50 over here, and I'll say close crosses above pivot points S1 standard. All right. So some of you might be wondering, why didn't I directly write close crosses above pivot points? Why did I have to use the symbol function? So basically, if I create this condition directly over here, what will happen is, for example, this condition, this will be checked on the at the money call option, not on the Nifty index. I wanted to check a condition on Nifty index. That is why I have used the symbol function over here. Now whatever conditions we'll be creating without the use of symbol function, because we want to check those conditions on the at the money call option. So our first condition is going to be the open interest condition. For that, I'll use period mean. I want the open interest moving average to rise continuously. So open interest moving average exponential 5. So 5 exponential moving average I have selected because this moving average will be sticking very close to the OI. So basically we'll not be losing a lot of information because of smoothing, and we'll have a certain degree of smoothing as well. Click on done. Minus open interest moving average exponential 5 minus 1 should be higher than number 0. So in this whole condition, I'm just saying that for the last 5 candles, the moving average of open interest, exponential 5 moving average of open interest should be continuously rising. That's all I want to say by using this condition, the whole condition, right? Let's create another condition for volume. So again, I'll be using period mean. This time for volume, we are going to check only for last 3 candles. It should be rising for the last 3 candles. So you can basically, what you can do is experiment with different values and check which one is giving you the best performance. So here what I'll do is I'll type moving average. In the input, I'll select volume exponential 5 minus moving average again volume, 5 exponential. Here I'll put -1. This also has to be higher than number 0. All right. In the stop loss, we are going to put 15, target 30%. So again, here what I want to say is that the exponential moving average 5 of the volume has to be rising for the last 3 candles. Now I'll scroll down, click over here, and in the end time, I'm going to select 11:59. So basically, I do not want to trade after 11:59 for this particular strategy. Will not be taking any entry after 11:59. Let's click on the save change button, and now we'll click on this save and backtest and run this backtest. So backtest has started running. We should get the results also over here pretty quickly. Meanwhile, we can have a look at the strategy that we have created, or we can check the different conditions that we have selected over here. We've got the results also over here. I can click over here and check the detailed backtest report. I can check each and every transaction that has taken place in a table as well as in a chart form over here. I'll be able to click on the back brokerage button and check the returns after accounting for brokerage as well. So again, I have shown you how you can deploy the strategy. If you want to deploy, you can click over here and click on the deploy button. The strategy will be deployed in the market. If you have any confusion or any doubts, please let me know in the comments. I'll be very, very happy to solve it. So we have seen strategy examples, 2 strategy examples. Now, as I had told you earlier, we'll be looking at some scanner examples. Let's say you want to scan for all the stocks where the price, volume and OI trend, all the things are moving in an uptrend. How can we scan for those kind of stocks? Let us go to the scanners now, and we'll be creating this particular scanner. And there's one more scanner that we'll be creating after this one. So again, we'll be going to the Streak platform. If you want to open this strategy directly on your device, you can scan this QR code or open this link in your browser. So scanners, price, volume, I'll just give it some name. Let's click on the create button now. So here we'll have to select our scanning universe. There are a lot of options available here. We have Nifty, Bank Nifty options, different sectors are there. Then we also have currencies, commodities, futures, etc. Right? So for this example, let's go with NFO futures. So we'll be doing scanning on futures contracts. Right? Here you can pick any time frame as per your preference. Let me select 5 minutes for now. Here you can pick your chart type. We'll go with candlestick only. So let's start creating our condition. Period mean 5 for the last 5 candles. That's why I have selected 5 over here. Moving average, exponential, volume 5, right, minus moving average, exponential 5, volume minus 1 has to be higher than number 0. Let's add one more condition. I'll simply copy this. We have to change only one thing. So let me paste it over here. So instead of volume, we'll select close this time to check the uptrend in price. Right? Again, I can basically paste the same thing over here. I'll remove this and I'll remove this. Instead of that, we are going to put moving average of the open interest, exponential 5. So I have already explained this why I'm using exponential 5 all the time, because exponential 5 moving average will be sticking very close to the actual data itself. So done. Open interest moving average, period 5 exponential, here -1, higher than 0, right? So let me just confirm all the conditions once. Right, so let us run the scanner and see the results. If I click on scan and save, it will quickly give me results. You can verify these results on the chart as well. So if you want to deploy this scanner in the live market, what you can do is you can click on the take live button. Here you can pick your alert frequency. Let's say I pick 1 minute. Now what will happen is every 1 minute Streak system will automatically run the scanner for me, and it will send me alerts whenever it identifies such stocks which match my scanning criteria. So I can click on the take live button and take my scanner in the live market as well. Now let us go and learn about the second scanner. Second scanner is also very similar. In this one, we are just going to change the price trend. So until now, we have just been talking about rising trend. So how do you create condition for falling or downward trend? That also we'll need to learn. So in this one, we'll just modify the previous scanner itself, copy it, modify it, so that we can add one more condition we can remove the condition of rising price trend, and we'll be able to feed in condition for the falling price trend. Again, you can scan this QR code or open this link directly in your browser to access this strategy. Let's go to the Streak platform again. So here I'll just click over here and copy this scanner. I'll give it a name and click on the copy button. So again, we'll click over here, click on the edit scanner button. Now we just need to change this one condition over here, the price condition. So I'll just remove this one, moving average close. Let us remove that condition. We'll add one more condition over here, period max 5, moving average exponential. Here we'll put close 5 minus moving average exponential 5. In the offset, I'll pick -1. In the field, we'll choose close itself. Right, so here we'll have to put lower than 0. Done. Let's pick a different time frame this time. So all the conditions have been fed in. Now we just need to click on the save and scan button. Let us do that. So here, as you can see, we have got the results. Now again, to take the scanner live, you can click on the take live button, or you can also share the scanner with your friends and family if you want. Here let me show you, we also have a lot of discover scanners available. So basically these are pre-built scanners that we have made, chart patterns, webinar scanners, bullish, intraday bearish, etc. So you can come over here and explore these scanners as well. So I have a question for all of you. You'll have to let me know your answers in the chat. How do you check for strong downtrend using price, volume and open interest? Basically, what should be the trend of the price, volume and open interest to check for a strong downtrend? Please let me know your answers in the chat. You can even let me know your answers in the comments. So we have come to So let me know your answers in the comments. We've come to the conclusion. Dynamic contracts make it very easy to create and backtest option strategy with variety of contracts and easy strike selection. So basically you can even create strategies such as iron condor, short strangle, long strangle, etc. If you have difficulty in creating those strategies, do write to me on my email ID, support@streak.tech. We are going to assist you, or you can even contact me directly in the comments. Option strategies can be created with a combination of Greeks, OI, indicators, price action, etc. We also have option Greeks available. Then option strategies can be easily backtested on expired contracts. We have data right from March 2020 onwards, which allows you to backtest your strategy under different market conditions. So thank you everyone. It's a pleasure to have all of you with us towards the end of this webinar. For any further questions or suggestions, please feel free to write to us on our email ID, support@streak.tech. You can even join us on the social media handles I have mentioned over here. If you're logging in for the first time on the Streak platform, you'll have an option to request for a demo. You can use that option and request for a personalized demo as well. Thank you everyone. See you next time. If you have any suggestions regarding upcoming webinars, please let me know in the comments. I'll make sure to cover each and every topics that you're suggesting. Take care everyone. Bye-bye.